Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Follow me on X, the iChart Daily. Today is February 1st, 2026. In today's video, I'm going to be going over Bitcoin. What am I thinking? It's been a while since I've made a full transparency video, so let's go over it. This is not financial advice, but I have been doing technical analysis for going on 18 years now. I've been investing, charting, and buying crypto for about 11 years now. I got in the game around over here, 2015-16, when it was nothing, right? But my father was an options broker for 26 years. So I've been looking at charts my entire life. I just transitioned from stocks like MO that pay me dividends to XRP before it was listed on Coinbase over here in 2016. I got receipts. So Bitcoin, the first thing. Let's get into it, cuzzies. I'm going to be giving you my entire thought process. So the first thing I see is not the chart. I'm looking at the tickers. The first thing I see is the CME price is at 84.105 because the Chicago exchange is not open on the weekends. And the Bitcoin chart on Bitstamp is at 78.501. So obviously there is a gap there. If you're short-term trader, there's obviously room to grow. Long-term trader, I still stand on my long-term trends, predict short-term outcomes, and I don't like it. I don't like it. The reason why I don't like the longer time frames is because all I'm looking to do is catch waves. When I look at longer time frames like the 2-month, the monthly, and the 3-week, I'm trying to predict the entire bear and bull market. So because I have experience in the game and I understand that there's a 4-year cycle, it still stays intact. Trends are your friend till the end. So we go up, we come down, halvening, we go up, we come down, halvening, we go up, we come down, halvening, we go up. Let's go over some facts if this is your first video. Unfortunately, each wave that is happening is getting smaller and smaller. This is just because of adoption. Each dump is getting smaller and smaller. This is because of adoption. And this most recent pump is 700 and something percent in 1,000 days. Now, one thing I do want to say, and once again, I'm being fully transparent in this video, the asset is up, bro. Right? Let's be realistic here. Right? The asset's up 5.458 million%. So anyone that tells you Bitcoin's a scam doesn't have any knowledge of finance. And the reason why I say that is because all you care about when you invest money is ROI. What has the asset done in the past? What do you predict it to do in the future? How long is it going to take me to make my money back? And how much money do you think I could make if I hold it 1 year, 5 years, 10 years, 15 years, 20 years? That is everyone's first question when you want to buy a house, a piece of property, a Rolex, an asset, a commodity, whatever, right? A Pokemon card. That's the first thing. So the point of this rant is when I'm looking at a chart, the first thing I want to see is, well, what has it done compared to crypto, right? If something in the past 13, 14, 15 years has not done 5.4 million%, then it's like, so why are you holding that asset, right? Now, one thing I do want to throw out there is this curve that is happening eventually will come to an end, right? Because if this is doing 80% and 80%, unfortunately, this one was like, what was it, 700%, and the most recent dump was 77%, right? So you go 80, 80 something, 70 something. If this one is 70 something to 60 something, right, and we come back down, I think we come to like possibly here, right? Anywhere from like this 50, say 63,000 down to 50,000. That would only be a 60% correction, right? And anyone that says that Bitcoin crashing is bad doesn't understand opportunity and volatility, right? If the asset just went up and to the right, I mean, that wouldn't make any sense. And if the asset stayed flat, well, that wouldn't make sense. And if the asset just went straight down, well, that wouldn't make sense either, right? People need to open up sell orders to fill your buy orders during the bear markets, and people need to have buy orders to fill your sell orders during the tops of the bear markets. The point of this is I don't know what's going to happen the first time the 4-year cycle does the same high and the same low. That is the question that I would love AI to to help me with. But as of right now, just looking at this chart, short term, yeah, there could be a dead cat bounce, but long term, right? I'm thinking this is on the table. I'm thinking this is on the table, and I'm thinking this is on the table. So now what I do with technical analysis is I look in the past to see if I can make an argument on what is happening now with the price action and the indicators, and then if I could duplicate it again on every aspect. So you could see the moving averages, right? And I use the moving averages as a visual. When poo-poo hit the fan, where did we go to? Was there a trend? Meaning, did it go to a certain color moving average every single time or around that moving average, right? And the reason why I say that is if the red line is around 50 something thousand and we touched it or went below or went a little bit above and then touched it during COVID and then touched it over here, then it's on the table, right? Then I go to the monthly, and this is just one of the thought processes. And then what I do is in my brain, I confluence all of the visuals to see if there's a higher probability of it going down or going up, right? And then if we're going down, are we going to continue having dead cat bounces all the way down? Is it going to be a descending triangle? Is it going to be a double top? That's still on the table to see if we're going to go back up and retest the 100 or if we're going to just continuously see rejection from the moving averages. Now, another thing that I posted on X, follow me, this visual was sticking out like a sore thumb, right? So on the 2-week chart, we were staying above the moving averages. This is also called a golden cross here when the shorter time moving averages, which are the purple, when the RSI is below, white when the RSI is above the 50. So we were below, the golden cross right here is technically when all the money was supposed to come in at 27,000 because it proved that the bull market was on. It formed an inverse head and shoulders. We were going up from there technically here. But this was the retest and the confirmation. So what I'm trying to show you is the visual of when something, regardless of this right here, this name right here, Bitcoin, regardless of that, when certain things play out on the chart, it's a clear visual of bullish or bearish momentum. When the candles are above, it's bullish. Once you see that first break in the ice and then the moving average is doing something like this, or something like this, or something like this, which is a death cross, right? Your shorter time moving averages are going below the longer time moving averages. That's a visual in my head that we could be forming something of a top here, okay? I said this could potentially be a bear flag down. I said this looked like we were forming something of a bottom and then just going up to like 98 to 100,000, maybe 105,000 here. But I was saying that this could be a head and shoulders, right? So that's another thing that I see, but I just want to go over the moving averages now, and then I'll go into candle patterns. Moving averages. You could see here in the past, is there a trend? Yes. We had this top form, and then once the candles broke below, and we went to the green line. Okay, so let's go over what they are. Don't look at this because I changed them. It is 30-day moving average is the red, 50 is the green, 100 is the yellow. Okay, let me give you here's a clearer visual. You can see here we broke down, went to the green. Once we broke the green, where did we go to? Yellow. Okay, 1 second. Right here is what I'm talking about. Okay, we formed that top, went to green, used red as resistance, yellow. Range. Okay, not perfect, but it went down to that. Because we have room here, that's fueling me in my predictions, in my trading, to be like, this isn't over yet. We could have another dead cat bounce, come up, recover, go to 89, 90, 100 and some thousand, whatever it is. But as long as I go into indicators and longer time frames and see more bearish structure, all these are bear traps. All these were bear traps, bear traps, bear traps, right? When you go to the past, this is what I mean. Like, this is 434 days, bro. That's a year. Everyone's messaging me like, how long, how long, how long? Bro, I've been saying for the longest time, the 4-year cycle has been telling me, in my experience, that 2026 is going to be, should be bad if we see the bear market come. Because then that gives about a year until 2028. Now, let's go into it, right? I follow trends. And when does someone like me who has 18 years experience don't like a trend? When too many people know about it. Because then it's not cool anymore, right? Something is cool when only a certain amount of people know about it, whether it's a rave or it's whatever, right? A fad, clothing, that's just life in general. The cool thing is when it's new. So it's like, I don't know, it's hard to explain. Um, Everyone knows. CNBC knows. They're all talking about it on the news. Every YouTuber is talking about it. Everyone on Reddit knows about it. Like, so that means that, like, it's not over until it's over. But the 4-year cycle, I think, is coming to an end. Now, that is an 8-year, 8 to 12-year ahead prediction, right? It hasn't happened yet. But I don't like that the pumps are getting smaller. The dumps are getting smaller, and eventually, like I said, the pump and the dump will equal sideways, and Bitcoin will be stuck between a range. And once that happens, that's the first time it's ever happened. And once the first time something happens in a chart, it's unpredictability. And when people, or I should say the market, right, there are certain rules that the market follows. Fear, uncertainty, and doubt. The money's going to go somewhere. Does it go to another project? Probably, right? What project? I don't know. Um, do I see that happening in the next cycle from 2028 to 20 whatever? I don't think so. I still think we have a higher high. I still think adoption is still early. I still think the market has no idea what projects are going to be the winner. Because we're in that stage right now that, like, every single year or every single cycle, the coins that were in the sectors are being beaten by the new coins in new sectors, but there's a lot of scam coins, so even the good coins they're getting black eyes by the poo-poo coins, and then the old coins who have the old technology still do stuff, but because their market caps are so high, they don't do as much. And that's the realization of this game right now. I'm being very honest with you this video, and this is why the news doesn't like me. Because most projects are scams. You could, like, create a coin. Well, first you have to take a step back and you need to figure out which layer won during the start of the bull market. So in 2027, or at the end of 2026 this year, right? It could be that if we are fully blown bear market when we go to the 50s and the 60s, if Solana is still the #1 coin that the meme coins are being made on, then Solana is the #1 layer one that should do the most pumpage because people are holding Solana to convert it on Phantom, wherever they're doing, to make the meme coins, which are making them even more money. So they're double dipping. And then because Solana goes up, they take profit from their meme coins and they go back to Solana. See, so I've been in this game for so long, and do me a favor, I have 720 subscribers, but yet channels have 400 subscribers, and they're spewing nonsense down your throat. This is the realization of the market, the stuff I'm telling you, okay? Before Solana was Ethereum. And Ethereum was the one that you had to buy and hold, and then you were making the memes on that. So Ethereum went to the moon. The next coin, I don't know if it's Solana, but I'm telling you the process. I'm giving you the sauce. I'm giving you the recipe. You understand? Because regardless of the news, that's the realization. And the most second realization thing I could tell you is it's based off market cap. So the coins that pump the most are the ones with the smallest market cap because they could give you the most gains. It's not because of the team, the project, the utilization, the transaction time, the color of its thumbnails. That's the realization of it. And then unfortunately, the whales use the market cap to get to a certain point and then it stops. And then retail is held with their coins in their hands like they are now, like everyone who thought that this coin was going to take over and I mean, just throwing it out there, I was telling my YouTube channel to buy Solana from $10 to $15, right? I was telling my channel to buy Bitcoin from 17.5, 15.5, 13.5, and to take profit at 80, 90, and 100. What was the news been telling me for the whole time? So let's get back into some charting, right? And why I don't like it altogether. So I'm looking at this 15 to a buck 25. I turn on my indicators and I instantly turn into a surfer. Think of yourself like you're surfing. And regardless of what the fucking news is telling you, if certain things are playing out in the chart, it usually comes to fruition. Don't trust me. Do this. Do this. TradingView is free. Get a MACD, delete all the indicators because TradingView will allow you to have like 3 or 4 indicators. Get a MACD, get a RSI, get a stochastic RSI, use the settings that I have, and just follow the waves. And if you did that and you just took your hand and covered the candles and just said when the death cross happens on a 2-month chart, it's not the best. Right? And once again, on a 2-month chart, each candle takes 2 months of trading. So I'm making this video on February 1st, but if it happens in April, May, June, July, then that's what's going to happen. But I need to be ahead of the curve because, well, I've already been ahead of the curve, right? I closed my position at 95, 96,000. But and the long here, forget it. That was long been closed. Right now, you need to transition your brain to be emotionless, robotic, consistent thought process. If this is happening, you need to change your mindset to bearish. And if this is happening, you need to transition or change your mind to more bullish. It's one of the most hardest things you could do, difficult things you could do, because you need to be emotionless. You need to not go to X and see Michael Saylor talking about he's buying regardless, or you need to not go to X or YouTube when it's at 15,000 and hear Jamie Dimon saying that it's trash and no one could buy it and no one should buy it, right? Because that messes with what I am teaching you. So what I'm teaching you is when there's a death cross, that's bearish. When it happens on longer time frames, monthly, 2-week, 3-week, like around here, not the weekly, but I would say the longer time frames, 2, 3, monthly, and 2-month, you're predicting the bull and bear market, right? When the RSI, which is the blue line, goes below the moving average, that is strike 2. Think of it like a probability chart. And now your probability of calling the bear market and it going way lower when this is about to happen, right? So the best thing is when the confirmations that I've been trying to tell you guys when they're about to happen, because these are trailing indicators. So the poo-poo needs to hit the fan. The red candle needs to start printing in order for the bad things to happen on the indicators. So you need to be like MacGyver, and you need to understand. Okay, I have a cop friend older gentleman, and when you're selling to someone, you use references that they understand, right? So I'm trying to tell this gentleman, you need to be like the police officer in a deli, and you understand that this guy that just walked in doesn't look right, something's off, and you know he's about to rob something, but he didn't yet. But your spidey senses are up. Or when you're walking down the street and you don't like that someone's walking too close behind you, and your spidey sensors are spot like something's not right. You need to be like that in technical analysis. And when the news is telling you that stuff is going up, mass adoption, we're going to 250 and 500 and this and that, and FOMO is happening, right? Same thing with gold and silver. I laugh when people are like, I'm buying at 5,000. I'm like, okay, cool. And, forget that. Gold and silver move so slow. Once again, so anyway, back to crypto. I don't want to rant on. Once the stochastic RSI death crosses and breaks below the 80, that is strike 3. So then what I do is I look left and I say, well, are there any trend lines and stuff like that that could help me understand where liquidity is? And obviously 16,000 is one. Then you have 32,000, which is another. And then one thing in technical analysis, if you're going to have a continuation to the upside, what was resistance turns into support, and what was support turns into resistance. And what I mean by that, to give you a visual, is this level right here has been used once already. Okay, this was the previous high. This was when we went from the COVID lows of 3,800 all the way to 70 something thousand, let's just say 68,000, depending on the exchange that you were on, right? And I see that being used as support here, 52,000 to let's just say 65,000, right? Now, in one of my past videos, I said, well, if the poo-poo hits the fan and we form the stop here, because we're getting the bearish momentum out of the longer time frame indicators, we could have a head and shoulders, right? Now, the neckline of the head and shoulders would be this right here, the 78 to, let's just say, 74,000. So I'm curious to see if this is the other shoulder, this very weak move from 81 to 97,000 is the shoulder. And so the first thing I'm going to do is set an alert right below these wicks here, right? So I need to know if it breaks 73, 74,000, right? And if we do, then I know my next major support could potentially be anywhere from 66 to 52,000. Now, I've turned on my moving averages. I'm curious if that lines up with anything that I told you in the start of the video, right? You could see here the 100-day moving average lines up with that little liquidity zone here. You could see, boom, right to it, right? Boom, COVID went right to it. The descending triangle back in 2018, measured move down to around it. So because there's a trend, and back here even as well, right? The yellow line would have been right here, right around this 192 level. So because there's a trend of it going to around it, and we're not even there yet, I could see us forming support at the 50-day moving average. You can see here the divergence indicator is going off. We have 6 divergences right now, and we are obviously oversold a lot. I'm curious to see where the bear flag takes us. All right, so the bear flag would be, this is the leg down. I could zoom in to give you a better visual. There you go. So the bear flag does this. All right, looks like a hockey stick. If you turn on the moving averages, we get rejected from the moving averages. They're purple, which shows me that this is the first time since 2023 that the RSI is below the 50 line. And that was another thing that I was like, I was talking to my boy Frank, and I was like, dude, if we get rejected by this 50 and we don't get above, like, it's a bear flag. And we were both like, yeah. And the measured move, which was what I was trying to figure out just now. All right, let's turn this off and give you the visual. Is you would take this Some people say they go all the way up to the top, but I'm a conservative trader. I want my stuff to hit, bro. You know what I'm saying? So the meat and potatoes is really like 116, and then you would copy and paste to the breakdown. And then what I'm trying to do once again is in my head confluence as many liquidity price zones that I can of where I think this place, where this price can go to. This is the first leg down. Obviously, I do think it could come up. Remember what I told you before, what was support, right, could turn into resistance if this is a continuation to the downside. Me telling you that this is not the bottom means that this could be a continuation to the downside, that this is not the bottom. Um, and we could have like a recovery, dead cat bounce, another bear flag, and then pop back down to, like I said here, like this 58 to potentially 57,000. I mean, just to give you another visual, obviously you could put on a VPVR. You go from your top to the bottom, and you could clearly see massive amounts of volume being here. I didn't need to turn that on to see it because the candles forming at this range here shows me that, right? I've been doing it for so long. So now that's another visual, right? This 54 to 64,000. Yeah, and then the weekly as well, right? We just broke down the 100. You could see here candles were above, like I said, that 27, 28,000. Right here is really where you want to open up that long. Right here is where you really want to open up that short, because it confirms that this was not a short-term W bottom recovery back to the 100,000. No, we only went up and used those moving averages as resistance. When you see that, that's a confirmation. That's a visual that I look for, right? Same thing here, right? I was like, I've said it. I said it in the past. I posted it on X. I was like, if we don't break these moving averages, that is not good. I thought it was going to go up to like 100 to 108 and really fake people out. But we had zero volume to even break the 98,000. People were listening because that's smart money. All right, I try and teach you guys that as well. If I say something is going to 125,000, sell your sell orders, not financial advice, but your take profit level should be below that, right? Which is why when everyone was saying 10,000 Bitcoin, I said, no, let's start buying around 17 and 15 and 13 and get in around there, right? And then you had 5 to 700% returns thereafter. So the shorter time, give me a second. I only turn on the 30, 50, 100 for like long-term plays. Bitcoin loves to use the 11 and 21 as like a magnet. So now that we're oversold, I mean, you could clearly see what was support can turn into resistance. So unfortunately, we could have recovery, but I'm not bullish. You don't want to be bullish during a long-term chart bearish, because I'll explain. ROI, right? We were both in the market from here to here, but the assets down 40% down, or you had to get in and get out for a 20% play, and that wasn't the play. All right, I said I was opening my thing up around here, 82, 85,000, and we're waiting for that bottom, and I didn't get out at 97,000. I think it was like 95 something. It was like over here. As soon as I saw the rejection from the moving averages, 94.5, 95.5. So you're looking at a 10% play, but it had like a 2, 3x leverage. So, hypothetically, if anyone's listening, fake money. So my point is, during bearish times, when the longer time frames, when you click on a monthly and you're seeing what I told you before about the death crosses and the RSI below, and especially below the 50, and they're stochastic and a death cross, and below the 50 and below the 20, you don't want to think this is it, I'm going to catch this pump up. You want to watch the pump up in the recovery or dead cat bounce, right? You want to see the dead cat bounce, this measly 9%, and then you want to see the rejection and then the cross down, right? You want to see the death cross down and the breakdown. You could have got in here from Sunday the 25th to the 29th, because this is a 4-day chart. So 25th to 29th, this is when you should have been watching that chart, saying we're about to get open a short, right? You wanted your liquidation price to be above 97,000, above this most recent high here, and you could have had a beautiful one candle here, right? This candle here is 15%. It's bigger than the entire dead cat bounce. So the videos that I'm going to be posting are going to be shifted to more bearish. It is what it is. You need to learn, my son. You need to learn to shift. There is no crying. There is no hope on this channel. I've been telling my circle to accumulate cash. Yeah, for about 4 or 5 months. I've been telling them something is going to happen. I've been saying on this channel, is this the first time that you should be buying Bitcoin? Not financial advice. I said, no, I'm not telling people that because I'm still in the trend of the 4-year cycle and I didn't like the bearish structure happening on the longer time frames. So I have friends, hypothetically, they're imaginary, but I do have them. And, we've been sitting on cash. Instead of accumulating crypto and gold and silver at all-time highs, I was telling them to accumulate the worst asset out of all of them, but it's cash. Because if you have cash and you took profits on the way up and you didn't look at the ticker, not financial advice, let me back test here. People always ask me, when should I take profit? Right? If I don't know anything about it, every 100%, bro. Every 100% take 10%. Not financial advice, but do it. Just saying. Every 100% take your initial investment out, and then you're playing with the house's money. Like, have you ever gone to the casino? You know what I'm saying? Like, what are we talking about here? And this is why I want you to look at a chart, because if you buy and hold and don't need the money, best investment. You'll probably beat all of your friends. But most people buy, hold to make money, the ROI argument that I've been telling you, and they don't have 4 years to hold it, which is why I'm trying to teach you to like put your money in around here, like this 1 to 2 years, right? I just answered someone in WhatsApp, and I was like, the end of 2026, 2027. If we have a whole year of 2027 of accumulation, right? Or 6 months of accumulation. I'm talking about like this, like 2, 4, 6, right? 2, 4, 6, 8, 10, right? 2, 4, 6, 8, 10. So you had months to put the money back in, and then this was 2, 4, 6, 8, 10 months of a top. This was 2, 4, 6 months of a top. This was 2, 4, 6, 8 months of a top. This one's tough, right? This one was only 2, 4, potentially 6 months of the top, 8 months, and now we're here, depending on where you got in, right? I mean, like 17.5, 15.5, 13.5, they're still chilling, seeing if we're going to be breaking the 72,000 to see if we're going to go back up. It's on the table. It's potential, We could definitely stop here at this 70,000 and then go back up to the 93 to potentially 102 and do something like this. Fake everybody out again, right? As long as we don't break the 125, it's another descending triangle. Like this one, we went from 19 to 6 back up to 17 and proved exactly what I just said. We didn't make that higher high. Or if we do make the higher high, the first thing you need to do is turn on the indicators to see if it's making a lower high, right? So all these options are on the table, and we're extremely oversold right now. But I just wanted to give you a full breakdown of what I'm thinking, what am I looking for, major support, and stuff like that. Enjoy the day. Love you guys.